Hey everybody, thanks for joining me once again. It is the start of the fourth quarter. Fourth quarter is upon us, and it is the perfect time to start talking about taxes. Everybody's favorite subject. Everybody loves taxes. I know that. It says that on the board right here behind me, see? Everybody loves taxes. So it must be true. Now, we've all come across the guy in the truck stop sometime between January and March that is just walking around all pissed off, grumbling about, I just had my taxes done and I owed all this damn money and I don't have it, and trucking's the best way to go broke and I might as well spend all the money because the government's going to take it anyway, and that is just such a load of crap. What it really means is he didn't care enough to do any tax planning for his business and he wants to blame it on somebody else. Everybody else but himself. So there's a better way, and I'm going to show you that today. A way to save yourself a ton of time, grief, and potentially a lot of money actually, just by doing one simple thing every year. And this is the perfect time to do it. So what I'm talking about is, if you've seen my video, and if you haven't, I'm going to link to it in the description below. I encourage you to go back and watch it, about record keeping for your business, okay? A real simple, clean, and easy way to do it. And here's the point in time where it's really going to start to pay off for you, okay? So what I'm going to do is go into the computer in that spreadsheet that I keep for taxes, and I'm going to go to the year to date for the year. Now I just made up one here because I'm not putting my real numbers up there. It's nobody's business. But, and I went to the year to date button. Down at the bottom of the spreadsheet you'll see January through December, and then a YTD for year to date. Print that out, okay? And some numbers on here we're going to be concerned with are the income, total expenses, and total profit, okay? That's all we need to really know right now. And then we're going to put some other things on here. We're going to write down the number of days we spent on the road so far this year for the first 3 quarters. We're going to take, if you're married, we're going to take a copy of your spouse's current pay stub. And then we're going to write on here if we've paid any interest on any loans. Say you have a truck loan or a trailer loan, call the bank and say, hey, what did I pay on interest on these loans so far this year? And then if you bought any new equipment or sold any new equipment, we'll jot that on here if you made any other big major moves. But with this basic information, we're going to take this one sheet, and not a shoebox full of receipts or a pile of receipts. We're going to be organized. You save yourself a lot of money. And we're going to go see our accountant for a mid-year tax review, okay? We're going to say, I want 1 hour of your time, and we're going to do a mock tax return. It's not going to be filed, so it's not important that it be accurate to the penny. And we're going to give them just these basic pieces of information here. We're going to do a mock tax return. They can figure out your spouse's income, prorate it based on their pay stub. So we'll put all that in, and that'll give us a pretty good picture of where you're at so far for the year. Assuming that the rest of the year continues pretty normal, this is a good place to start. You could even do this at the beginning of October, whatever, but don't put it off too long, because you want to allow yourself a little bit of time so that if you need to make some changes, you need some time to make these changes, okay? If you need to make any major moves. Now, we're going to put that in. They're going to come back to you with a number, and they're going to say, sir, you've done very well this year. You're right on track. You've made the quarterly estimates that I've provided for you to pay this year. Based on last year's taxes, your accountant will give you some quarterly estimates to pay, and you should be relatively close if your income is similar and expenses are similar to last year. But we all know in trucking that things can change drastically from year to year, and I expect a lot of people's income for 2020 to be, and expenses to be, very different than they were for the previous year, just because of all the variations in the industry throughout the year. So if you're even, you're right on track. You're within a few hundred or $1,000. You did a pretty good job. Or they might say you've overpaid for the year, and we could either reduce your fourth quarter's estimated payments, or we could just let it ride. You make the payments and you'll get a refund, or we could apply that money forward towards your next year's taxes, which is what I would probably do in that case. But here's where the big one comes in. They could come back and say, sir, you're going to get whopped with a tax bill here of $10,000. You made a lot more profit this year and you're on track to get hit with a serious bill. And that's where this pays off immensely, okay? Because now, being that it's the start of the fourth quarter, we've got some time to work on this and make some really good decisions rather than last minute drastic decisions that really aren't going to do you justice. Some different things you could do, okay? Let's provide some solutions along with this. The first thing you could do, well, there's many things you could do, however you want to go about it. If you're sitting on a pile of cash, heck, you deserve some time off. You want to take some time off so you don't have so much income coming in the rest of the year. Hey, more power to you. If that's how you want to do it, spend some time with your family doing what you love, whatever. That's one of the perks of being self-employed. If you want to do something like that, knock yourself out. Second thing you can do, you could pile a bunch of money into qualified retirement plans. And I got plenty of videos on that. So if you're interested, you don't know what to do, hey, sit down and start educating yourself on that, or go see a professional. But there is a world of options out there before you go spending money that you do not need to spend just to save taxes. Next thing you can do is start doing some tax spending. By the start of the third quarter, you should start getting a picture of where you're at on different maintenance items for the year and what's going to need to be done soon. If you're into the end of October and you're looking at your tires and saying, hey, I'm going to need tires pretty darn soon within 6 months, nothing to stop you from going and buying those tires and just setting them aside in your garage or wherever and taking the expense for this year rather than next year. That's a perfectly legitimate thing to do. You could buy some extra supplies, cases of oil, grease, wiper fluid. Whatever you use in your trucking business is a legitimate thing to buy. Now, within reason, I wouldn't go out and buy 3 sets of tires. That's you're gonna have enough tires to last you for 7 years, because by the time 7 years rolls around, those tires are going to be weather checked and cracked and not in good shape anyway. So just, you know what I'm talking about. Use good judgment there. Another thing you could do is you're looking at your equipment and you're thinking about in the back of your mind, someday I'm going to have to replace this thing. Maybe now's the time to do it. That's a pretty large decision. I would spend a lot of time on that one, because I've never really been in favor of getting rid of perfectly good equipment solely for the only purpose of taking a tax deduction. But sometimes that makes sense. Depends on how big the benefit is. So that's something to consider. But if we're talking if your equipment is 2-3 years away from being replaced, that's a tough decision. If you're going to replace it next year anyway, well, then maybe it's a good idea to do it this year. You can divide that depreciation up and just take a small chunk of it this year. Take more of it in the next few years to come. Something else I would look at is, I'm never in favor of spending money just on pretty shiny things that don't make you any money. However, if you're having a thought, say you have a trailer and you're like, boy, someday it would be nice to have trailer skirts under here to improve my fuel economy, but I just can't justify spending the money, and it's a hard decision to make, $2,000-$3,000, however much it is. I haven't even priced those things in a while. Well, this might be a good time to do something like that. It's something that's going to make you extra money going forward. You'll get the tax deduction. It's something you've been wanting to kind of do. That's one of those things that can be a good business decision. You're kind of improving your efficiency, which leads to more income. There's not too many problems here that you're going to come across that can't be dealt with. And saving yourself this grief can change the way you look at your business, rather than being that guy in January that's saying, damn it, I might as well not even do this. I got to pay all this money in taxes and I don't have it and this and that. You could be the guy that says, well, I did really well last year. I made good money. I socked away a bunch of money in retirement. All my equipment is maintained and up to date. And I'm looking forward to next year. And I'm going to manage this throughout the year. I'm going to do these mid-year tax reviews every year. Hell, there's been times where I've gone in June and then again in October or November. That small amount of money, $200-$300, whatever it's going to cost you, save you thousands. So I just encourage you to do that. Be proactive. Take charge of your business. And we will see you next time.